Hi, thank you for joining us in our Future of Money series. We conduct interviews, we hold panels with industry leaders on a variety of topics, and we are excited and grateful for having our esteemed guests in the studio today. We are talking RWA, probably real world assets topic is one of the most hottest topics in the industry right now. So with me in the studio is Simon Balakani, who is a co-founder of Zebec, and I will ask him to open up the panel and introduce us and our point of view and our thesis on RWA.
Thank you, Elena, and thanks to all of our panelists for joining this exciting conversation today on RWA. So as many of you know, Zebec is a pioneer in Web3 payment systems, and we've been at the forefront of the RWA movement since we first tokenized payroll back in 2021 when we started as a company. RWA thesis at Zebec has always been simple. Demand for stablecoin payroll and Web3 payments will continue to grow with time. And Zebec is at the cutting edge of tokenization as one of the first companies to bring real-world payroll assets on-chain in the form of USDC backed by fiat payroll flows. We're on track this year to process nearly $1 billion in real-world payroll volume. And every month we see a higher and higher rate converted to USDC, enabled by our Zebec Paid app and our WageLink early wage tool. The opportunity presented by tokenized payroll opens a world of possibilities to employees who can now send money globally, faster, cheaper, and easier than any of the existing solutions on the market today. So we're really excited today to dive deep into the world of RWA. Zebec has obviously tackled one subset of the real world assets out there, which is payroll. But we're excited to hear from all of our panelists on how their respective companies are approaching this topic.
Thank you, Simon, for this opener. With us in studio is Katie Wheeler with ONDO Finance. Katie brings to leadership position decade track record from the industry Wall Street leading institutions like Morgan Stanley and BlackRock, as well as time at Crypto Royalty Circle. Sanjay Raghavan is a product and finance leader specializing in fintech and financial services. Sanjay and I have sat on a few panels talking about tokenization in real estate, and he led the Roofstock on-chain as well as strategic finance at Roofstock, and has extensive expertise and interest in both DeFi projects as well as RWA space. And Jordan Gitterman, founder of Banc, which tokenizes business inventories and is a first-of-its-kind global parity valuation engine. Jordan's focus is on facilitating informed, frictionless, fair peer-to-peer trade. So we've got some gurus in the room, and I will ask Katie to open up, since ONDO Finance is like very few companies in the space have deeper expertise and experience in the world of tokenization of financial instruments and bringing real-world assets on chain, doing so in the institutional level. So you guys are viewed by many as a category-defining innovators and setting the trends and standards. So if you can set us up, stage is yours, Katie, and tell us about ONDO and your viewpoint and your handling of RWA.
Yeah, absolutely. Let's be here. Thanks for having me. I'm Katie, VP of Partnerships here at ONDO Finance. I joined the firm back in September, so I've been here about 10 months. ONDO Finance was actually founded back in 2021. We're a US-based technology company that focuses on making institutional-grade financial products and services available to everyone. ONDO focuses both on the tokenization of securities, but as well as the development of decentralized protocols that improve the utility and distribution of those specific tokens. So basically, we think of ourselves as an asset manager who simply leverages the public blockchain. We are the leader in U.S. tokenized treasuries. We recently surpassed 500 million of TVL, which is a really exciting accomplishment for us. And we currently have two main products. We have the first product, which is OUSG, which is ONDO Short-Term U.S. Government Treasury. This is structured as a Reg D offering, so it's globally available, but you have to be a qualified purchaser to access it. When we first brought this product to market back in February 2023, we actually ended up wrapping a BlackRock short-term treasury ETF. Obviously a very Web2 fund, T+2 settlement, but when Securitize and BlackRock rolled out the new BIDL fund, we took the advantage to replace that underlying ETF with this new fund, which allows us to do something really cool, which is instant 24/7 minting and redemptions. So I think that's a really interesting new use case that has allowed a lot of people to dip kind of their first toe into crypto capital markets. And then the second product that we brought to the market back in August, so coming up on almost a year, and we've surpassed 300 million of TVL, is our USDY, or US dollar yield token. This product was structured as a Reg S offering. So unfortunately, me in the United States, I can't touch it, but it is retail facing and it trades permissionlessly in the secondary market, which makes it very cool and compostable in DeFi, payments, payroll. And that's really where we've been, speaking with the Zebec team.
Thank you, Katie, for this insight and introduction to what you guys do. Sanjay, can I ask you, in the context of your experience with Roofstock and tokenizing real estate and moving it on chain, can you take us a little bit further back and set us this for those who might not be familiar with the terms that we're starting to use, and that are now common in our vocabulary in the industry, but may not be immediately understood in a broader audience? Can you talk about fundamentals of tokenization and then take us through the example of Roofstock and NFT home sale?
Yeah, absolutely. Thanks for having me. I'm Sanjay. Most recently, I was heading Roofstock on-chain, which was the Web3 arm of Roofstock, a leading prop tech company specializing in the single-family residential rental property space. When you start with the broad topic of what is tokenization, in broad terms, I think tokenization, to simplify what it means, you can essentially call it a way of wrapping assets, right? Whether these are physical assets, financial assets, right? Different types of assets can be wrapped into a digital asset. And that process of wrapping these various real world assets and putting a digital wrapper on it, we can broadly call that tokenization, right? As an example, already Simon talked about tokenizing payroll, and Katie has talked about taking traditional ETFs, BlackRock ETFs. You cannot get any more TradFi than that, right? But putting a digital wrapper on that, tokenizing them and offering them as tokenized assets in the Web3 world, right? So those are all different examples where you can take assets that occur in the traditional world, add a digital wrapper to it, and it becomes a tokenized asset. The advantages, obviously, of tokenization are, one, I think Simon pointed to this earlier, it's just when you have paytech use cases, right? And paytech, I mean payment technologies. And this could be anything that involves global payments, remittances, any settlement, cross-border settlements, trade finance, so on and so forth. For all these types of problems, typically, if you're relying on TradFi rails, your money has to move through the banking system internationally. And typically, that's a multi-day process. And often the counterparty banks does not have access to Swift network, or they're not a national bank, but a regional bank. Then the money has to flow through, go to some other bank in their country and then, come over to them. It's a very complex process, takes many days and often very expensive, right? If you just take the remittance industry itself, the way remittance counterparties work with each other is they have something called pre-funded accounts globally. And this is right now estimated to be something like $4 trillion just sitting in bank accounts globally between remittance counterparties. And if you did not need to go through TradFi and you could simply settle using USDC or any other stablecoin, that's fast, cheap, 24/7 instantaneous, right? So a lot of the use cases pertaining to tokenization are developing around the fact that you now have access to move assets and move money instantaneously, right? If you wrap an asset, a regular asset, and put a digital wrapper around it, and you have this electronic money that can also move instantaneously, you have a very powerful tool when you bring this programmable money with these assets, because it's now instantaneously possible to buy and sell these assets, right? Which in the TradFi world has always been an aspirational thing, but never quite possible. So I think that's what's super exciting about RWA tokenization, and simply even, when you talk about bringing in programmable money and all the things it can do. Going to Roofstock quickly, obviously as a prop tech company, their interest was to see what can we do from an innovation perspective, where a traditional settlement of a single family home, is about 3 weeks if everything goes well. And if you have financing contingencies that need to be resolved, sometimes that can be 5, 6, even 8 weeks, right? And they wanted to try and see how can we really try to get to an instantaneous sale and settlement perhaps, using these newer technologies, Web3 technologies. And so I took on the challenge, even though it's a sort of a hard asset class, it's highly regulated in the US. There's not only real estate law that you have to adhere to, but there's also securities laws, and each state has its own laws pertaining to real estate transfers. So you also have to do a variety of 50 state surveys to make sure that you're compliant with local laws as well, right? So we took on this very complicated use case, but mostly to demonstrate what is possible using Web3. And, we decided to use several composable elements that were already available in the Ethereum ecosystem. So the NFTs, for example, non-fungible tokens, which uniquely represent a single asset, that was a good proxy for us to say that you can, in fact, have a single family property sitting in a legal entity that can be somehow associated with this NFT, right? So we had that. And there were already lenders working in the NFT space doing NFT loans. So we were able to leverage those relationships to see if we could do asset-based lending against these assets. There were already NFT marketplaces, both publicly available as OpenSea, and then companies in Web3 that were offering white-labeled NFT marketplaces. So it was sort of easy to put all those pieces together. And again, USDC as a way to settle these transactions with a one-to-one redemption to US dollars, right? Which means you had stability, you had safety, and you are not necessarily taking on the volatility that you see in crypto otherwise, right? So these are stable rails. And so all these pieces made it possible for us to then show that you can actually buy and sell homes instantaneously with leverage using DeFi protocols. So that's kind of what we set out to prove. And it was a very interesting exercise. We successfully did a few pilot properties in multiple US geographies, 3 different states, just to demonstrate the art of what was possible here.
Certainly, Sanjay. Thank you. And I follow those transactions closely, having spent some time at Propi that also is putting real estate on chain. This is a use case. I appreciate you taking a moment to explain this to us. Jen, the floor is yours. Tell us more that I didn't add to the intro and what Item Bank does and how that whole area fits into your business.
Sure, I'll dive right into what Item Bank does. And we're focusing on tokenizing businesses' inventory. And initially, we're doing this to get businesses onto Web3. It's a form of marketing where if you're on Web3, you don't have to deal with algorithms, you don't have to deal with SEO rankings. And so all of the data is pretty equal as you're on Web3. Imagine you're on OpenSea, you made some NFT trades, and you have some tax liabilities coming up, and you're fearful of that because your accountant doesn't seem very versed in it. And as you're on OpenSea, you just happen to put in an accountant, and there shows up several accountants, and they appear to have experience in blockchain and cryptocurrency and these different assets, and they seem to know how to handle that. So you're probably going to call one of them. And I think that this is an overlooked attribute to tokenization. And it's very similar to like when websites first came out in the 1990s, where people really didn't have an idea, like how effective are they going to be? What are we going to use them for even? And I think that this is something we're focusing on. I don't think that many other people are doing it. I do believe they will, as people see it's very cost effective to tokenize something, and it's like a digital billboard that stays there. And if your product is unique and it's accessible, then I think people will start to call it. And the accessibility goes now to metadata, where these are things we have to work on. In the metadata is all this information, and we have to work on getting that somewhat uniform so that people can find all of these different tokens. What Item Bank is focusing on, aside from the tokenization of business inventories, is the token of basic human needs, using that as the base of value, because gold and silver, unfortunately, are manipulated. Currently, most everything is priced, certainly in international markets, is priced in US dollars. And US dollars are not a good measure of value at this time. We are printing, many dollars. So if you keep printing many dollars, it's like using a ruler that keeps changing in size to try and measure something. So what we're trying to do is, by using basic human need items and creating indexes out of them for each region in the world, for each area in the world, you can start to determine the purchasing power of currencies, of cryptocurrencies, and of actual other tokenized items as they start to trade. So that's what we work on in a quick nutshell at Iron Bank.
Going back to the RWA topic and some of the broader concepts here, Katie, can you summarize for us the benefits of tokenizing and what might be the risks or challenges that investors should be aware of while they participate or explore the tokenized asset markets?
I would say that the benefits are fractional ownership. Investors can now buy and sell smaller portions of assets, making more illiquid assets like real estate or art more liquid. And then efficiencies. Tokenization can oftentimes streamline the process of issuing, transferring, and settling asset ownership, which reduces administrative overhead and sometimes eliminates intermediaries, which can then lead to lower transaction costs and faster settlement times. Another one that we work a lot with ONDO is global accessibility. We work with people in emerging markets who are facing hyperinflation, or maybe they have capital controls. So now with these tokens, you can basically access US capital markets from Colombia or Turkey or the Philippines or Nigeria. It's basically making finance much more globally accessible. Another one is trust. Tokenization allows for autonomous settlement of real-world assets without requiring a trusted third party to act as a clearing agent. The blockchain is obviously a great source of truth. And then interoperability, I would say, is another one. Tokenizing real-world assets can open standards allowing usage across multiple platforms. For example, USDY is cross-chain on 8 different ecosystems. Each ecosystem, we utilize the token in a different way. For example, in Solana, I would say payments is a big use case versus Arbitrum. DeFi might be the star use case. And then I guess if you were to talk about some of the risks or challenges, of course, regulatory uncertainty is a big one right now. Many aspects of tokenization are still in this kind of legal gray area. For example, we don't have a stablecoin bill in the United States, so it's very hard to comply with that bill. So at ONDO, we just comply with securities laws because those are the only rules of the road that we are aware of. And then there's obviously technology risks, there's hacking risks, there's liquidity concerns. But I think over time, those will get ironed out. You know, what we're doing is not easy. We're basically trying to rewire the financial system and make it borderless. And so it's going to take some time and effort and collaboration. But I think the benefits greatly outweigh the negatives.
I'm glad how you talked about the social benefits and put in perspective why we actually are embarking on all of this. And Sanjay, going back to your pilot projects and your discussion of finding the path, what do you think that adoption might look like?
And something often a lot of people in the RWA community spend a lot of time thinking about. In my opinion, right, and just based on the few years I've spent specifically in the Web3 industry, but also looking at a lot of the inefficiencies in TradFi and potential advantages of moving some of that over. The path I see is you're going to have to start with something that's less risky and more liquid, and then move towards assets that are perhaps more risky and less liquid, right? And what I mean by that is there's a whole kind of risk-return spectrum when you look at different assets that are available. And even if you just look at fixed income or debt assets, for example, right, at the one extreme, you have the most safest asset classes like short-term US Treasuries, right? And that's what Katie talked about in terms of what ONDO's been doing with their OUSG and USDY product. So when you look at credit risk there, you're essentially assuming the full faith and credit of the US government, right? And of course, one may debate whether that's worth anything or not, but you know they do have S&P and Moody's rating, and you can today in the sort of financial world, we can certainly assume that it's amongst the safest asset classes. And it's also highly liquid. As Katie was saying, with the BlackRock Biddle Fund, you can now get to instantaneous mints and redemptions. But even without it, right, you're looking at a T+2 settlement, which is, in the context of things, it's not too bad, right? Compared to something like private credit, which is, let's say, on the other extreme of the spectrum, because you're taking on the idiosyncratic risk of a single company's credit worthiness. And, if it's a small startup, potentially they're not rated. So their risk might be, similar to a high bond or perhaps even higher than that in some situations. And they're also highly illiquid because private credit, there's no immediate market, secondary market where you can turn around and sell your loans. When you're looking at those types of assets, typically there's an illiquidity spread to those assets because you're taking on this additional risk. Generally, if the public markets, if a high yield asset is going at 9%, you might expect a unitranche private credit deal to go at least 150 to 300 basis points higher than that. Often, you might see deals that are mezzanine or subordinated that even go for much higher rates, right? So as you take on risks of different type, one is credit risk, one is liquidity risk, the returns will proportionally tend to go up. But the challenge of trying to bring those types of more complex assets in Web3, I think, we still need to go through a cycle of understanding how to underwrite, how to monitor them, how to manage them. And a lot of the companies that entered into private credit in Web3 have had a few defaults occur over the last 9 to 12 months, and they're revamping their processes to think about how do you go to this very large asset class, because I think even in the US, private credit is about $1 trillion. Globally, it's 1.7 trillion. So it's certainly a large asset class, but you have to, come at it in a way that's more mature, taking lessons from TradFi and applying it here. So the starting for tokenization, in my opinion, is going to these very safe and secure, highly liquid asset classes like what ONDO is doing, and then working your way from there to more complex and esoteric asset classes.
Jordan, can you touch us on what technology is needed? What infrastructure needs to be in place? How what's currently has been built and accomplished is facilitating all that new innovation and experimentation, and what do you see is needed going forward?
I think we have enough infrastructure actually to start tokenizing everything for the use that is of creating awareness of these products as marketing goods or services as a marketing vehicle. The only thing that might need to be developed, and it is fairly easy, would be marketplaces for that. So take, for example, one of the initial forays into WA tokenization was OpenSea's and its ilk, where they were marketing digital art and fractionalized ownership of art. So there have to be marketplaces like that geared towards the advertising or the marketing of products on Web3. I think this topic is overlooked. I think that the biggest issue probably right now is regulation, as Katie said earlier. And if you're just using tokens to market your products, you don't really have to deal with the regulation, and that the tokens aren't being transferred or anything like that. So I don't see how they would be construed as a security. But as you start to want to do some of the things that Katie and ONDO are doing and some of the things that Sanjay's are doing, you would need, all different types of different technologies to be developed, which, I think, I'm focusing really on right now using Web3 as a marketing vehicle, and as the infrastructure gets built out, as regulation gets settled, then at that point, I do believe tokens will start being traded for each other.
We talked about a lot of potential impacts and impacts we're already seeing. We might want to take it to Katie and explore the trends. Like, are there anything that you see other than continued experimentation, anything to share on the trends, Katie, and then Sanjay, Jordan, as we start wrapping up our discussion today, if you kind of leave us with your predictions and your observations, whether or not that is anchored in what the companies are doing or use cases that you're familiar with, or what you're seeing in the broader world.
Yeah, I mean, I would say ONDO's kind of focused on the most boring part of this, cash and cash equivalents. The Fed fund rate is above 5%. I feel like that was a strong market sign for us to get into the space. With these two products we've come to market with, it's allowed us to get product market fit, build a brand. But I think of this very much as like inning one of a very long game. When we're speaking with cash equivalents, it doesn't mean that you can't tokenize more exciting things. For example, Galaxy Digital just recently tokenized a 300-year-old violin that was worth $9 million. That's a great example to show that tokenization can increase liquidity and allow owners to realize economic value of their assets without selling them. So that tokenized violin was actually used as collateral for financing later. There's a lot of interesting use cases with supply chains. For example, the controversy around blood diamonds and being able to track the origins of specific hard materials. So I think the use cases are kind of unlimited. I do think that it's going to take more time than most people think. But once again, I'm very bullish on this whole space, and I think it'll be an exciting journey.
I agree. I think that the field is unlimited. And Sanjay, I know you
Yeah.
you would share potentials and the dreams. So go for it.
No, you stole the words right out of my mouth. I 100% agree with Katie here. I think the potential is endless. I am very optimistic about paid tech as an industry because that's where a lot of the Web3 innovation can completely revolutionize how money moves around the world in traditional finance, right? And I'm really bullish about that. I think Katie perhaps mentioned about the risk that people take in emerging markets with respect to hyperinflation, or the potential that their currency might just devalue significantly over time. And, they now have access to a US dollar denominated asset, which also makes them some yield. So there's a little bit of an inflation hedge against the US asset, but also you're protected against your own local currency hyperinflation. So these types of things really excite me because you're able to bring financial solutions around the world to emerging markets and areas where traditional finance is not yet mature. You don't have capital markets that are sophisticated, and you don't have access to a plethora of equity and fixed income products. So those types of things really excite me about the future. I think with everything we've seen in Web3, with all the infrastructure and tooling that's in place, it's a matter of time. There are a few things. I think, like Katie said, one is lack of clear regulations, but that's, will get sorted out over time. There's a couple of other things from a technology perspective. For example, there's a lot of blockchains, so we need some way to abstract out wallets and be able to use apps that can be kind of compatible with each other. We also need things like gas abstraction. Gas is this very unique Web3 concept that a lot of traditional finance people, or people in the non-Web3 world will not necessarily understand. Once we solve some of these issues like wallet abstraction, gas abstraction, and just, have a little bit more regulatory guidance in place, the possibilities are truly endless.
Yeah, I again, let's see, you're speaking my mind too. Jordan, anything to add to and to wrap us up, and hopefully on a good positive note, and feel free to add whatever answer you wanted to give to whatever question I didn't ask yet.
Sure. So I entered into the blockchain field as someone who was interested in tokenizing real world assets. So that was like 5.5 years ago. There was no term RWA, asset tokenization. I'm an advocate of tokenization, sound money. I was in the mining business, actually mining for gold and for copper. And so, my first ideas was, hey, if you tokenize gold, you have like the perfect money. And at the time, people thought I was missing the boat, because if you tokenize gold and one token equaled 1 ounce of gold, how are you going to make $1 million? Because at the time, Ethereum and Bitcoin were just really flying. Maybe Dash was the only other currency at the time, cryptocurrency, that had liquidity. So now, over the last really year and a half, 2 years, there is this RWA tokenization term. And although I do think for the full impact of what we're discussing, RWA tokenization will take, many, many, many years, because I do believe virtually everything is going to be tokenized. You have governments that want to tokenize it, NGOs that want to tokenize it, banks that want to tokenize it, but it is the hottest topic right now. This past week, BlackRock announced that they want to create a tokenized stock exchange in Texas. They did that with Citadel and some other major companies. Fidelity International is using JP Morgan's Onyx digital assets now to tokenize their money market fund. So the financial markets right now are the real hot topic. They're going to be tokenized. Like in the next couple of years, I think people will start to really use these tokens to make trades, to interact in the financial markets, through tokenization. But I think we're moving at a very fast, rapid pace right now. The only thing standing in the way, in my opinion, is regulation. And I do think that since we're in a global market, people work around areas where the regulation is onerous or not clear and go to areas where it is, forcing those areas who have onerous and unclear regulations to eventually institute, hopefully, fair and good regulation. But I think I think everything will be tokenized, or at least there's a push to tokenize everything. And I think that the impact of real world asset tokenization will be felt in the next year and a half, 2 years, not in every sector, but for example, in the financial sector, where they're talking about tokenizing the stock exchange, major companies doing it who have the wherewithal to do it. So I think while we have a very long way to go, I think we're going to see the impact of this very quickly, actually.
I can't agree more. I hope the trends and predictions you are sharing would come to fruition, and we will be able to get together in a year and compare notes on how right we were. Thank you very much to our panelists, Katie, Sanjay, Jordan, and Simon. Till
Thank
the
you.
next episode of Future of Money.